I'm Ian Monroe. I have a few hats, like many of you here. I teach courses on sustainability science, supply chain sustainability, and scaling up solutions to climate change at Stanford University. I founded a sustainable, personal sustainability impact tracking tech company called Oroeco, and then out of that, I've also founded a sustainable investment company, Etho Capital, that gets into a lot of what we kicked off with the president of IBM Foundation this morning, a deeper dive into looking at company sustainability and incorporating that into empowering us all to actually align our investments with our sustainability values. So just to get a little bit of engagement, kick things off, how many of you work for a mission-driven organization, either a company or an NGO? And I would assume it's almost all of us, given the fact that we're here at the NGO Summit. Now, second question, how many of you work for a mission-driven organization that actually empowers all your employees to invest in companies that align with your organization's mission? Almost none of you. And unfortunately, that is par for the course. Most, even NGOs and foundations, and certainly companies as well with their 401k plans, don't actually allow those of us that want to invest our values to have options that allow us to invest in our values. And how many of you, just on a personal level, make sure that all of your investments are 100% aligned with your values? So your entire retirement plan, anything else that you're investing in terms of funds. Also, almost none of you. And that is also, unfortunately, par for the course. So we're all here as mission-driven individuals. I will be talking a bit about financial products, so I have to give the standard disclaimer. I'm assuming you're going to absorb this all in the next few seconds. Basically, it's that past performance cannot guarantee future returns, which makes the SEC happy if I say that. So the rhetoric around sustainable investing is really going mainstream. Many of the world's largest pools of capital, pension funds, sovereign wealth funds, are now signed on to something called the UN Principles on Responsible Investing. There's now close to 80 trillion that have signed on to the UN PRI principles, saying that we believe sustainable investing is important. On an individual level, the vast majority of us say we want to invest our values. Millennials, over 85%, according to research from Morgan Stanley, are now saying that they want to be investing in a sustainable way. Over 70% of investors overall would like to have their personal values incorporated into their responsible investments. But still, there's a huge gap between those of us as individuals and the organizations that we're connected to saying that we want to invest sustainably and what's actually going on with sustainable investing. There's expected to be upwards of 15 to 20 trillion shifting into sustainable investments, what are often called now ESG investments, environmental, social, and governance investments. But again, there's still a pretty big gap between this rhetoric and the actual reality. And a big reason for this gap, there's basically two reasons. There's first, just not still great data on what companies are actually doing in terms of sustainability. And there's also a general perception, which I hope I can convince you is a misperception, that if you invest in alignment with your values, you're going to lose money. It's something for bleeding heart hippies and not something for real serious investors who actually want to maximize their returns. So first, let's talk about the data problems, the environmental, social, and governance data problems. One is most of the commonly used ESG data sets that are out there, unfortunately, are really primarily based on voluntary corporate social responsibility reports, CSR reports put out by companies. And the voluntary CSR reports are generally just put out there by the larger companies, so large cap companies, mega cap companies. They're pretty good at putting out glossy CSR reports saying how great and sustainable they are. But unfortunately, there's still very little third-party verification and standardization of what gets reported in CSR reports. So long story short, it's really easy to lie and only tell the positive stories and leave out the negative stories. And even in the best CSR reporting, often all that's talked about is what actually goes on the factory floor for companies, and it leaves out what's called Scope 3 supply chain information, which for a whole lot of companies, if you're making a physical product in particular, that supply chain information, all the social responsibility and environmental responsibility connected to your supply chain, that's often over 80% of the picture, sometimes even over 90% of the picture. But even the leaders in CSR reporting generally say next to nothing about their supply chains, sometimes because they don't really know. Actually, most of the time because they don't really know. So long story short, CSR reporting as it currently stands, there's a lot of possibility for fraud and just negligence with what's going on. Whoop, lost the slides. And it also is really heavily biased towards larger companies, while mid-sized companies and smaller companies may be just as sustainable, if not more so, but they're not, they don't have the staff to put out the glossy CSR reports that then get them highly ranked in the conventional ESG rating systems. So with what we do at Etho Capital, and this connects with what I teach at Stanford as well, we take a much deeper dive beyond just what companies are doing at their factories and what they're saying in their CSR reports to look at what they're actually doing in the real world in their supply chains, and often getting deeper into what companies are really doing as opposed to just what they market themselves as doing than the companies even know about themselves. And we do this with our own analysis and data partners that we work with. A lot modeling impacts based on mandatory financial disclosures that are third-party verified and audited rather than voluntary CSR disclosures. And then we also have brought in sustainability experts from across the academic and nonprofit worlds to help us in this analysis, and I open that up as an invitation to any of you that are interested in being involved. The cool thing is we've shown, particularly when you look at impacts related to climate change, climate pollution per dollar invested, what we call climate efficiency, and you incorporate climate impacts throughout the supply chain for companies, compare companies with their industry peers, whether it's in the healthcare industry or different types of consumer products or tech. The companies that are the most climate efficient, when you do this deeper dive analysis of what they're actually doing, including their supply chain, those climate efficiency leaders tend to just financially outperform. And we think that that's because greenhouse gas emissions are so pervasive throughout the supply chain that they actually are just a good indication for overall operational efficiency for companies. And again, getting into what companies are really doing, that operational efficiency signal is probably also an indication that companies simply have better, smarter, more innovative management decision-making that isn't just about the best CSR marketing, but about real sustainable, responsible technology implementation throughout the supply chain. So our process, which I'm happy to go into in a lot more detail beyond this, is basically looking at this quantitative climate efficiency analysis, finding the leaders in each industry, not just the best marketers. And then we do the more typical sustainability screening to identify bad actors as well. We take out industries we consider entirely socially irresponsible or unsustainable, like fossil fuels, weapons, and tobacco, private prisons as well, a number of other industries. And then the final phase is our own internal analysis and additional input from sustainability experts, as I mentioned, throughout the nonprofit world and academia that help us identify any individual companies that still, after our first quantitative and qualitative analysis, have some sort of environmental, social, or governance issue that warrants them being excluded. And probably what I should have just started with is the fact that this seems to really work. We've created this index called the Climate Leadership Index of the sustainability efficiency leaders throughout the US, and we have a global version as well. And this index and an exchange-traded fund, which you can just check, it trades on the New York Stock Exchange every day with the ETHO ticker for Etho, same as the name of the company, that has substantially outperformed the S&P 500 since we launched in 2015. In fact, it's been one of the best performing index funds, period, sustainable or otherwise. So we're showing that really you can incorporate all your sustainability values in a much deeper, more authentic way and simply do better than the market. We've outperformed basically every benchmark and other funds in the space. We did analysis going back more than 10 years showing that this financial outperformance is there. And of course, with things like the electrification of transportation, cheaper and cheaper renewable energy and batteries, as well as disruptions to supply chains from increasing disasters connected to climate change, we think that supply chain efficiency and true sustainability is only going to be more and more important. Unfortunately, my family has gone through one of these climate disasters recently. I grew up on a small farm in Northern California, and we were totally devastated by one of the record wildfires last year, and there's even more record wildfires this year. So myself, my mother, 20 other family members have all lost their homes in wildfires in just the last year. And unfortunately, this is exactly what the climate science projects will only happen more and more. So if you yourselves want to empower this stuff to move forward, I encourage you to look at your own investments, think about how to align them with your own sustainability values, and then challenge whatever company or organizations you're connected with to make sure that the investments they're offering to their employees for retirements actually are aligned with values as well. And for any of you interested in joining our network of sustainability expert decision makers and feedback providers for our process, I'd be happy to talk to you about that too.